11:11. So this is the end of the month, and we will want to take a quick review on what happened the previous month. So if you're doing anything, take away anything you're doing, get yourself a cup of coffee or tea, and be focused because we are about to discuss about what happened this month. So we're gonna know on how we are preparing for a new month. So before I started my trade this month, the first thing I start by doing is by going to the monthly time frame to look at the confluences that we are having in the monthly time frame. So as you all know, I'm a CRT trader, and as a CRT trader, I trade based on candles and not zones. So here I'll just take a quick review on GBP USD, and on GBP USD we have been bullish. If you look, you see it's a bearish market because we have previous break of structures to the downside, but from the beginning of this month we were bullish, and we have just like 4 months behind the market has been bearish. So now I want to see at the potentials that the market has been giving us from the beginning of the year and the monthly time frame. So I'll just quickly mark out a break of structure here. Price broke structure, we have a BOS around this area here, and now we need to look now for PD arrays on the monthly time frame. So what are the PD arrays I would like to mark on my monthly time frame? The first PD array I would like to mark is this fair value gap we have down here. So this fair value gap is the first PD array, and this fair value gap is the first PD array. I'm gonna be looking at price reaction from it. If price can eventually give us a push to the upside after tapping in, or we're gonna have a continuation push to the downside. So as a CRT trader, how did I approach this month? So firstly, I came to my monthly time frame and I marked out my CRT. So as you can see on the monthly time frame, we had this classic theory model CRT candle. As you can see here, as a CRT trader, we had this classic theory model CRT candle, CRT high, CRT low down here. So I'll take off this for now. So yeah, as you can see, we had our CRT high and our CRT low all the way down here. And of course, as a CRT trader, you only want to trade the third candle because you have the accumulation, the manipulation, and the third candle is the distribution coming all the way to your CRT target. So as you can see, this was our CRT. So I'll just quickly label it out. So we had our CRT high all the way here, and we had our CRT low all the way here. So as you can see, this is our monthly time frame, and from your monthly time frame you want to do your top-down analysis. So what is the next part you'll be looking at? You're looking at the weekly time frame, but without you forgetting that you are looking for PD arrays also on the higher time frame to look at where price might likely go to. So we have this fair value gap that we spot out here. So let me just use this to mark out the fair value gap. So we will look at this fair value gap on the lower time frame as we go down to the lower time frame. So now you go straight to your weekly time frame to look at how the CRT was played out on the previous month. So guys, as you can see, this is our weekly time frame. You can see price when price gave us a push to the upside, we had this big move to the downside, and we have a change in the state of delivery around this area. So we had the break of structure giving us a market structure shift, or change in character, or however you name it. We had it here, a market structure shift. And now what are you supposed to be looking at? You're supposed to be looking at that potential entries on the weekly time frame. If you're a swing trader, you will be looking at price at this order block slipping all the way here. So you can see we have price rejecting this order block, which also reacted as our monthly CRT. So we had this week above collected liquidity, and we have this close below, giving us that classic CRT we are looking at. So guys, if you're a swing trader, you could take your swing trades from up here all the way down here, and this could be a very good, nice and smooth trade. But now let's break it down to the day traders on how you could be able to take opportunities on this market each week as you're trading and you're understanding how the market moves. So let's take for example, you came here and you were not able to spot out this candle, and you are at this phase of the market where the market was accumulating. So we all know the market accumulates and gives us a distributional phase, which is it accumulates to collect liquidity, it generates liquidity, and for those who don't know, they blow their accounts as well. So you have price rejecting this order block. So as you can see here, we had price accumulating and rejecting this order block. So price retested this order block multiple times before giving you this impulse move to the downside, which implies if you go to the lower time frame, like your 4-hour time frame or your daily time frame. Let's go to the daily first, since it's a top-down analysis. So you want to look at what price is reacting on each single time frame. So as you can see at this level here, so we had this level here where liquidity was being built because price came here, gave us this down move, and we had a retracement coming back all the way to this order block. So I'm gonna remove this weekly order block we mark, and I'm gonna break it down to the daily order block. So on the daily time frame, we had this order block here that price collected the liquidity, and we had the other order block here that price also collected the liquidity. So if you understand the concept of order blocks, fair value gap, breaker block, mitigation blocks, you will never be left behind in the market. So this was our order blocks. Price collected liquidity, we had to push to the downside, then price came back all the way and collected this order block. While you can see you have your break of structures going to the downsides, you have the market breaking structures to the downside and giving you that momentum to the downside. So now, what will you be expecting? Let me mark out this break of structure. Yeah, so this is what we are looking at the daily time frame. So what am I expecting as a CRT trader? Price has already reached my monthly target. So if price is actually reacting in my monthly target, because I do trade SMC combined with CRT, but I mostly trade CRT most of the time. So if price is presently reacting on my monthly CRT target, what am I expected to see? I am expecting on the day on the higher time frame, I was anticipating a fair value gap. So let's check on that fair value gap on the weekly time frame firstly to see where the fair value gap lies. So as you can see guys, this was the fair value gap we were anticipating on the monthly time frame. So you all know the monthly time frame holds a higher confluences of the market. So for now, price has taken out this drawn liquidity here, which is the CRT low. But then we just want to see what the new month is gonna give us. So it's a probability game. You mark out your key levels and you wait for price reaction. That's just the game, and that's how it works. So at this level here, I want to see what this week is gonna look like. So for most of the newbie traders that are more into pressing the button, so you want to trade but you're still trading and blowing your account, it's because most of the times we trade out of ignorance. Most of the time we are ignorant in our trading. So what I'll advise most of my newbies is, when the market opens this week, I'm gonna advise you to give the market a breathing space, allow the market to play out, and you see the direction of the bias the market is going to give you from the weekly time frame. So if you want to take any trades, you're taking trades based on confirmations, because this is a CRT low down here. So you want to see price closing below the candlestick body on this CRT low for you to anticipate that, okay, maybe price might continue pushing to the downside. That's on the weekly time frame. You get the point, because price might still do pullback. You can see we have some internal range liquidities here. You can see we have a fair value gap here. We have an order block here. That price might still decide to maybe take out this liquidity, which is this order block, before giving you that down move. But then you don't want to rush the market. You want to let the market do its thing. You don't want to be against the bias of the market. So if you're a good trader, and if you're someone who you want to take your time, you want to build in profitability. Building in profitability requires a lot of hard work. It requires patience. So if you can be patient enough to look at the market to play out, and remember, your CRT low, it's a major key level from the monthly time frame to the weekly time frame to the daily time frame. So you want to see how that market is going to play out before you start looking at taking any potential entries in the market. So that will be the end of this class, and see you all on the next episode on CRC and our monthly. We'll be doing monthly review, weekly review, and daily review. I'll be posting on the channel, my YouTube, and my TikTok account. Do well to like, share, subscribe for more amazing content, and I will be running you guys on a free section on being a professional and profitable CRC and SMC traders. So thank you, like, share, subscribe, and peace out.